I'm a strong believer that beginner traders that buy highs and sell higher are likely to outperform those that attempt to buy lows and get the bounce that often doesn't come. Practical example, let's take a look at ticker symbol HIMS, HIMS. This thing is an absolute rocket ship, but 5 days ago, I made a post over on Twitter essentially saying that I still think this thing could go higher. That was on February 13th, this bar here, and it has in fact done that over the last few days. In fact, it is up 20% on the day today. What ends up happening with literally every beginner trader, including myself, I was not impervious to this, but you begin to do a form of made up back testing, whereas you look at a chart like the NVIDIA daily chart, and with really like no rules, no conditions. You just start saying things like, oh, I would have bought this dip and this dip and this dip and this dip, and I would have done really, really well on this ticker. My theory is that that doesn't translate to live trading. It's very easy to look back at an old chart and look at exactly where the bottoms are and imagine yourself buying those dips. But in real time, it may be difficult to actually time where those bottoms are, and oftentimes you end up getting stopped out even before a bounce that may be coming. So in today's video, we're going to perform a science experiment to figure out exactly which one of these strategies works better. I have built a strategy code within ThinkorSwim that is set up to either buy dips or to buy all-time highs based off of this one input parameter flip, and we are going to compare what is better using the exact same exit strategies across multiple different tickers. First, a quick explanation of the source code. The two lines plotted on the chart are the highest high value out of the last 10 bars and the lowest low value plotted out of the last 10 bars. If my ATH input parameter is flipped to yes, then we buy the close over the high line. Else, if no, then we buy the close that is closing below the low line. Our profit take is when the current bar closes greater than our entry price plus the average true range indicator multiplied by 2, and our stop loss is if the current bar closes less than our entry price minus the average true range indicator. So essentially just building a straightforward 2-to-1 risk reward based on the volatility of the ticker we are looking at. So you saw the gross P&L difference on NVIDIA already, but we are also going to turn on one of my custom built studies, my back test labels. This is going to show us the statistics of the strategy that is running on the chart. So right now I have the strategy set to the all-time high buys, as you can see by the name of the entrances, and you can see the statistics. $145,000, 48% win rate. By the way, I should mention that the position size will stay stagnant for this whole test as well. I will be taking $25,000 positions in every trade that we test today. 48% win rate, 11% max drawdown, which is really nice. All I need to do now is simply come in and flick this ATH over to no, and you will notice the names of the entrances change to dip buy, and we begin buying below the low line rather than above the high line. This is, of course, simulating dip buying versus all-time highs buying. Total P&L drops down to 70,000. The win percentage stays right at about 47%. I think that's just 1% lower than before, so not bad, but max drawdown of 80%. That is awful. This is honestly like the most important statistic in backtesting. Way more important than just the gross total P&L is the max drawdown percentage and the dip buying, even on NVIDIA. Look, it's NVIDIA. This stock is a freaking rocket ship, has an 80% max drawdown with dip buying. Why is that? Because remember, at the intro of this video, when I talked about how easy it is to imagine yourself buying the dips when you know where the bottom is, well, when you don't know where the bottom is and you have to attempt to buy the dip based off of objectified rules, as you should always be doing, you are trying to time the dip buys. Like in live real time, this might look like a decent dip to buy on a strong stock like Nvidia, when in reality, it still has further to go down. So once again, dip buying looks really easy on paper, is much harder to translate to real money trading than all-time high buying is. Let's take a look at some more examples. Just before we do, I want to let you know that I will upload this strategy to my website, daytradingstrategies.net, so you can head on over and sign up under the Our Codes tab today, get access to the strategy and over 110 other custom coded strategies, studies, even stock scanners, all available within ThinkorSwim. You can then take this strategy and do some of your own testing on your own tickers. You can even go in and edit the source code. Maybe you want to look at a different length of bars versus the high and low, whatever you want to look at, so you can sort of test and what works best to achieve your trading goals. So I've gone ahead and flicked the strategy back over to buying highs, and let's just take a look at another really popular name that people love to trade, Tesla. Once again, this is the all-time highs, the buying the breakouts strategy. Tesla is up over $93,000 with a max drawdown of 20%, which is not too bad at all. Of course, we want to come back in and we want to go ahead and change this input parameter to no, so that we are now buying the dips, and our total P&L drops all the way down to $52,000, and our max drawdown jumps all the way up to 31%. Another name, another instance in which buying highs is better than buying lows. So now let's go ahead and go back and take a look at HIMS, H-I-M-S, this ridiculously strong stock. Stocks like this are the stocks that are appearing on people's scanners. It's very easy to scan for stocks that are currently making highs. So let's take a look at how the strategy, when set to buying highs, is performing on this name. $30,000 up, 48% win rate, max drawdown of 55%, which seems high, but look, this is a really, really volatile stock. I mean, in the last month, this thing is up over 200%. If you're going to trade volatile stocks, you need to accept that there's going to be higher max drawdowns. That's just, unfortunately, the name of the game. You're not allowed to leverage more reward without taking more risk. So on this name, 55% is probably in the acceptable range. Let's go ahead and let's flip on over to no on ATH. So we are buying dips, and we drop down to a $22,000 total P&L on a 36% win rate. And the worst part, that max drawdown once again increases. And once again, it is because timing dip buys in real time is much more difficult than timing buying highs. Now, when you look back at the HIMS daily chart to where that max drawdown occurred, it occurs back here because the stock is sort of getting hammered. And buying dips on stocks that are getting hammered is going to lead to poor performance in a back test, correct? So that leads you to think, well, trade, it's not really a fair test, because when you are buying weakness, you end up buying a lot more macro weak stocks. My first point would be that's part of my argument for why buying strength is better for beginner traders. But anyway, let's come in and let's try to help out the dip buying strategy in this code. What I'm going to do is I'm going to append a condition onto my buy that also the bar must be closing over the 200 length simple moving average. Basically, the current price must also be above the average closing price out of the last 200 bars. That should get rid of the dip buying strategy, buying the stock on macro downtrend. As I hit apply and we come back out and look, indeed, it does. The dip buying strategy is no longer sort of buying this crap that got it crushed last time, and that does make the max drawdown adjust to just 67%, which is still not amazing, but it does make it better. So now with this condition flipped on as well for the all-time highs, buying high strategy, let's see the performance. So once again, with the dip buying, 15,300, 40% win rate, 67% max drawdown. With the highs, $30,000 total P&L, 48% win rate, and the max drawdown is still at that 55%. So even with this caveat turned on, you can see back here now the strategy is also not buying. It's trying to buy some of these breaks. So it's actually, this is making the buying high strategy even worse, if anything else. Even with this caveat turned on, it still seems that the buying high strategy is working better. And just so you know, that caveat of only buying if the current price is above the 200 simple moving average, we will now leave on for every test moving forward. This should be an attempt at helping the dip buy strategy. Anyway, let's take a look now at some bad names, because it's not a fair comparison of buying strength versus buying weakness if you only look at really strong names. The first stock that comes to my mind whenever I think of big company crappy stock is Ford. Sorry, any boomers out there that are invested in this thing. It is a great dividend name, but as far as active trading goes, it is a $9 stock today. It was a $9 stock in 1987. Basically, the ticker has never really done much. So it's a great place to get a fair comparison between these two strategies. Right now, we have the buy high strategy turned on. I see a max drawdown of 13%, which I like a lot. $93,000, just shy of $93,000 total P&L, 45% win percentage. Let's go ahead and flick it over to the dip buying strategy. And I immediately see a max drawdown of 193%. And that is not very good. And the total P&L, of course, is only dropped all the way down to only $8,000. So attempting to time the dips in real time on this stock have not worked anywhere near as just buying the breakouts. Something really fun we can look at. Since we can chart Bitcoin futures in ThinkorSwim, we can take a look at how the strategy performs on Bitcoin. Now, I do have to raise the position size of the strategy because Bitcoin is trading larger than 25,000, else the strategy will never enter. So don't compare the total P&L number of this test to other tests, but we can still compare them against themselves on this ticker. Anyway, with the high buy, with the buying breakouts, the drawdown is at 54%, which once again on an extremely volatile name like Bitcoin, not ridiculous. It's up $984,000, 49% win rate. Let's go ahead and flick this over to the dip buying. We are now buying when the bar breaks below the lowest low out of the last 10 on Bitcoin, and we're not even profitable anymore. 693% max drawdown. We're down $53,000 on a 30% win rate. Buying dips is extremely hard in practice versus buying breakouts. So buying high, selling higher statistically outperforms buy low, sell high. I don't want to say that buy low, sell high is completely wrong. I just think it's unfortunately a facade that beginners fall into when looking at a chart without statistics. Once again, buy low, sell high looks easy because when you're looking back at past stagnant history without statistics overlaid, it looks like, just buy this dip, sell up here. You're not thinking about how in real time you need to decide exactly where you should buy this dip, right? It's almost impossible to time the bottom in buy low, sell high. And listen, you are wrong a lot in buy high, sell higher as well, but the point is that statistically, you aren't wrong as much. And that, of course, is what matters in this game. So buy high, sell higher. I firmly believe that it is the better option for beginner traders to succeed early in their trading careers. And hopefully this video has helped prove that to you. Hit like if you learned something, subscribe to the channel if you would like to continue learning for free. And of course, check out my website, daytradingstrategies.net, which is linked in the description below this video so that you can access this strategy, tweak it, apply it, test it, prove what works best for your own trading goals. Not to mention, you will also get access to this back test study that shows you in real time the statistics of your strategy running on your chart. Those two things, plus 100 plus other codes, all available for one low price. So click the link, go read the reviews, decide if it's something that can help accelerate your trading journey. With all that being said, I'll catch you all in the next one.